Spectacular, isn't it? Welcome back to another weekly market update from Xylostar.
Markets were volatile this week. However, the outlook may improve after the two-day summit between Donald Trump and Xi Jinping in Beijing.
Yes, a lot of possibilities can come out of that meeting, Nihal. However, we shall see our expectations on chart. All right, everyone, good week instead of good morning or afternoon. With me, here we are kicking our weekly market updates with technical outlook. Starting off with Nasdaq. Yes, as we had highlighted in the previous week, market made a retracement of the trend line and continued up. Matter of fact, this trend line isn't optimally placed. I would rather join all these highs together, right? I will take this as slightly off an uptrend above an uptrend, which is something I teach about here in Xylostar. You don't really see it here and there on the internet. And yes, we do have double trends in parallel channels, and there are ways that you can utilize that to generate good trades. Okay, so that's about that. But we can see that markets moved again to that trend line, which is giving us a strong, I'm not going to say strong, I'm just going to say some bearish sentiment about this asset overall. Now, yes, the meeting between the Presidents Trump and Xi Jinping didn't reach out to optimal results, I would say. It just kept things more on, tried to stabilize things, but it didn't. And China might buy more planes from the US and US goods overall. So that's about it. And of course, I think the main reasoning for that visit wasn't necessarily to discuss about war. It was actually due to the situation of Taiwan, since Taiwan is a very big player when it comes to producing all these chips for AI and etc. etc. And since China has somewhat of control over Taiwan, the US has its concern about that. And because of that, we can see this bearish movement technically on Nasdaq. Yeah, all right. So yes, it moved as we had anticipated in the previous week, but this is somewhat of a volatile movement. You probably wouldn't have gotten a very good entry here, all right, on Nasdaq, but ultimately it did move. Whatever it is, you didn't have to buy it, nor I advocate it for. So that's about it. From here we can see a possible continuation to the upside and then a consolidation to come, right? That's about Nasdaq. Going into, all right, Nifty 50. Well, we did anticipate a slight move into the downside before a continuation of the upside, but that didn't happen because I think the meeting between the two presidents of the US and China should have brought us more of a positive outcome, which was really anticipated. But because it stalled the situation, which is exactly what's happened, all this truce that is claimably truce between the Iranians and the Americans to unknown date, and that meeting should have actually gave us more of a positive outcome, but technically it didn't actually do anything that is completely unpredictable. We could have had any good entries actually on this asset to short it from there, right? We can see that market fell into this support of that basically previous descending channel, right? And from here we can expect a further move to the downside and then retracement to that trend line, which is this downtrend. And from here we can see what happens next. Of course, we need some fundamentals to support that bullish movement. Actually, taking a short trade from here is not a bad idea, but of course, always follow the rules of your risk management. It is the only guardian that you have to safeguard your account. All right, going into gold. Gold, guys, actually have been moving in, I'm not going to say unpredictable way, right? I'm going to say in unexpected way, right? So overall, it should do certain movements, but when it is moving, it is creating different movements. And of course, we are getting these intel, right, that can give us entries on a small time frame to this. Actually, on this time frame too, you could have shorted gold with these intels here as an understanding market language, targeting this FVG and support. And of course, we have that support. What there is happening actually is, I already highlighted before that all of this area is or price range is highly demanded on gold. And we can see that once it fell here, we found some decent rejection. Even on the 4 hours, it was engulfing the sellers for a while. But we need to understand that gold is not going down because people are selling gold. So from here, we can anticipate now a reversal movement to the upside. We can see that yes, gold is in a bearish trend on a bigger time frame, and this failure is a very strong reasoning why, of course, along with the demand here, why it makes sense for it to go up. But gold is going down because people are buying in dollar to buy AI-related stocks and oil, right? It's not that people are selling gold. And there's a huge difference in the reasoning behind that move. All right, so we can expect a movement to the upside. It can actually be by multiple ranges. We could see it going to the trend line. We could see it going to this resistance. We could see it actually going into this mid-range. So there are multiple prices that gold can retrace to the upside for continuation to downside. And if we get confirmation, he says, yes, you can short, but make sure you keep your target in the demand zone. I would still not advocate for such a short, but if you're taking it on a daily time range, then yes, it is doable. Okay, that's about gold. Now looking at Euro USD, yes, it did move as we had anticipated in the previous week. And there is this bearish sentiment for the same reasoning, not sentiment upon the euro exactly. It's actually a bearish movement because of the bullish sentiment upon the dollar for the reason I had highlighted earlier. So from here, actually, we can have multiple ways that market might move. So we can see in this bearish movement, market is creating a trend line for us here. This is actually a valid support, and there is a trend line here also. So we can see market going up there as a retracement. And then if you get a confirmation for a short, you can target this continuation in trend. All right, also stick to risk management. I would advocate for taking trades on daily time ranges, not long before it, because this is what's happening, guys. If we get any reason to end this geopolitical circumstance now about oil and energy overall, markets will take impulsive action. All right, so hence everybody is anticipating that, and this is stall, right? It is more of a psychological strategy. That's about Euro USD. Going into Bitcoin, yes, also Bitcoin moved as we had anticipated, and now we can see there is some volatile movements are happening on Bitcoin. It could consolidate to the upside, continue in that range. We could see actually a further movement down before it starts moving up. So until we get a confirmation, same thing to gold. This week, guys, is not an optimal week for you to enter because we didn't get very practical outcomes from that meeting, which was the highlight we were waiting for quite a while now. All right, so be cautious trading for the upcoming week. And that will be it about the technical outlook. I'm going to pass the mic to Mr. Medium from London, speaking about fundamentals, and hopefully it gives you something more helpful with your trading.
Brilliant. Thank you, Sarah, for sharing your insightful analysis on the technical side. Here is Amir Amidian, Master of Finance and Investment student in the UK, and also financial market analyst at Xylostar. Donald Trump visit to China, United States CPI and PPI inflationary numbers, and also the chaos in the UK regarding the election. Let's have a look. Greeting everyone, welcome back to another weekly market update hosted by Xylostar. Last week we received different news regarding the economy, regarding the geopolitics, and also regarding the corporate earnings in the United States and also all around the world. Let's review it. First of all, I want to talk about the Batman of the financial markets last week, which was the technology, precisely better say NVIDIA. The technology sector was the main source of optimism in the financial markets at the start of the week initially, as a strong momentum in AI-related stocks and positive earnings from major tech companies, as mentioned earlier, NVIDIA, helped support investors' confidence. So it was the main reason financial markets moved higher. Now let's jump into the economic indicators and also review the most critical indicator of the last week, which was CPI and PPI from the United States. I want to start it first of all with the CPI, Consumer Price Index, as the US inflation picked up in April, with CPI rising 0.6% from the previous month and 3.8% year over year. The increase was mainly driven by higher energy, housing, and food costs, while core inflation also moved slightly higher to 2.8%. Next is about PPI. US producers' inflation jumped in April, with PPI rising by 1.4% month over year and 6% yearly, reflecting persistent upward pressure on prices across both goods and services, signaling that inflationary forces in the economy remain in play. From the United Kingdom, we received also the latest update of the GDP for the first quarter, or let's say the first release of the first quarter gross domestic product for England. The UK economy grew by 0.6% in the first 3 months of 2026, improving from 0.2% growth in the previous quarter, which was the final one of 2025. Growth was mainly supported by the services sector, while overall economic activity and income per person also increased compared to the last year, showing the economy started the 2026 on a strong footing. Despite the stronger UK GDP data, the pound remained under the pressure as political uncertainty continues to shake the investors' confidence. Concerns over leadership tensions within the Labour government, cabinet resignations, and fears of higher government borrowing have increased the volatility in the UK markets, pushing the bond yields higher as less investors are buying the bonds, or best say the gilts in England, and also it puts pressure on the Great British Pound. Investors, as mentioned earlier, are worried that ongoing political chaos could slow the economic decision making and keep pressure on British economy in the months ahead. Eventually, last week, Donald Trump visited China, and it was the main visit of Donald Trump after ages, or let's say after the gap which happened between his first and second presidency period. Donald Trump's visit to China was mostly about improving relations and showing a little bit more friendlier tone between both sides, with some talks around trade, corporations, and also updates regarding the Strait of Hormuz, as it is the main key driver of the energy prices all around the world. However, there were no major agreements or concert deals, so expectations were left unmet. Now let's dive into the next week. For the upcoming week, we expect a huge volatility in the financial markets as giant firms' earnings will be released, such as NVIDIA, the head of corporations and also technologies in the US, and also from the retail sales sector, we expect Walmart and the Home Depot earnings to be released by the next week, which are the best companies to track the financial shape of the families in the United States. Worth mentioning, some crucial economic indicators will be released as well, such as CPI for the Great British Pound, FOMC minutes for the United States, which can give us a clear image regarding the latest meeting of the FOMC members, and also PMI numbers for the Great British Pound, such as manufacturing and services in the region. And if you have any questions, I would be very grateful to answer to your questions in the chat box. Don't forget to leave comment for us. Stay tuned with Xylostar. See you next week.
Thank you for watching. See you on the next week. Don't forget to leave a like and a comment. Have a good week ahead.